On our first discussion today, we'll be talking inflation. The Consumer Price Index, which measures the rate of increase in the price of goods and services, rose to 15.70% in February 2022 amid soaring fuel prices and scarcity. Now, with the development, it means that the headline inflation rate slowed down in February when compared to the same month in the previous year. The rate is 1.63 percentage points lower compared to the rate recorded in February 2021. That's about 17.33%. Now, let's get perspectives, from our guests today. And we have joining us in the studio an economist, Dr. Tefa Abraham. Good morning and welcome to Daybreak once again.
Good morning. Thank you very much.
Thank you so much.
Good morning. It's my pleasure to be here. Regards. Yeah.
It seems like this fuel crisis that we're facing presently has put us in quite of a mess, isn't it?
Yeah, well, energy is an input to a lot of production systems, even consumption. And you need consumption for production to be sustained. Without consumption, there will be no production. Without production, there will be no employment. Without employment, income will be low. If income is low, there will be poverty and the economic recession will just take place. So energy being an input to consumption and production process, being scarce at this point means, as a result of supply shortage, simply means that transportation costs will go up. And once transportation cost goes up, even the person supplying newspapers to stations, the person selling food at junctions, the people who are operating POS, selling at every spot, they all have an increment in their own prices as a result of the increase in transportation cost. Then for major production units, they need diesel and fuel to run their systems, especially now that the shortage in PMS is backed up by a decline in electricity supply. So you can see that energy cost generally has gone up, and you have a lot of distortions in terms of supplies affecting prices. So the inflation report that was released by the National Bureau of Statistics showed that inflation went up to 15.57% from 15.56% in January. So you can see that inflation that maintains an upward rise. But already, we've always been arguing and maintaining that a double-digit inflation will always be problematic for Nigeria. So even if it has gone down to 15.5%, that double-digit figure of inflation still remains a huge cost because interest rates has to be higher than that 15% inflation rate. And by the time you add the cost of borrowing, it affects how businesses operate in general. So it's just a very painful moment that despite all the policy somersaults from monetary policy, fiscal policy, income redistribution policy, we have increase in cost factors that is making cost of living very high, and they're making most especially people's income not to have any sense in the open markets.
Yeah. Okay, now we've heard a lot about, inflation, inflation making a lot of businesses, shut down and everything. But is there a possibility that, inflation actually increases productivity?
Okay, the positive side of inflation, and that's a good question because most times when we talk about inflation, we look at it like just on the negative side. What inflation does is that it serves as a signal for businesses. So inflation in any sector, for example, the rise in energy costs right now that is making the black market guys to sell and cash out simply means that there is a shortage in supply of energy. So anybody that can go into that business to join the supply side to contribute to the market will definitely be making money and creating businesses. So inflation signals businesses. For example, if you look at the data released by the MBS, inflation is higher in the urban areas than the rural areas. But even for the rural areas, it's still double digit. So what that means is that every form of production activity that takes place in the rural area, farming, bringing of goods from rural area to the market, all those places have business opportunities. That is the immediate implication. Then also, if you look at it in terms of states, Kogi State has the highest level of inflation. What that means is that there are a lot of supply gaps in Kogi State that small businesses can be able to provide or cover when they join. So inflation signals access to business opportunities. But the only reason why economically we focus a lot on the negative side of inflation is because it erodes the value of money. The Naira, in our own case as Nigerians, is a store of value. And inflation is a thief in the night on that money that you saved. You want to save 100 naira on Monday morning and wake up on Friday morning still 100 naira. But inflation makes your 100 naira by Friday go down. For example, our 15.7% inflation rate simply means 100 naira can do what is equal to maybe 87 naira right now. Okay. So the value of money is being eroded by inflation. So for central bank, trying to keep inflation single digit and stable, even not single digit, but stable over time, will guarantee some form of return on investment. You want to be sure that when you inject $100 into an economy or 100 naira, that same value goes into the system and creates a profit that is worth it. And that's why one good way that will measure inflation as economists is using this McDonald's burger. That McDonald's burger should sell the same price worldwide. That's how the McDonald's guys factored it.
Right.
So when you notice that McDonald's is not selling in your country with the same price you be selling in the US, then shows that country's inflation is not doing too well. So you could currently the double-digit inflation has signals for investment, but in terms of macroeconomic aggregates, its effect on income, wages, and exchange rate, it's a very terrible situation right now.
Okay, so would you say if we are to set, a benchmark interest rate, will this in any way help us stabilize, the inflation status we're going through?
The long-term interest rate is the monetary policy rate. That's the one that the central bank meets periodically to try to fix the monetary policy rate when they set, and they also set a corridor around it, hoping that it will not go below or above a certain corridor. Usually they say it shouldn't go above 100 basis points.
Right.
And what that 100 basis point means is that it shouldn't go above 1% increase or decrease. And they also set a cash reserve ratio limit, and then also other commercial banking parameters that will help the financial system stay stable. So what happens is that inflation being 15.7% means that our monetary policy rate will likely remain high the way it is right now, because inflation plus interest rate is what gives you the cost of borrowing, the cost of loanable funds, because every business person wants to cover that cost of inflation. Even for Taj Bank, for Jaiz Bank, for the Islamic banking model, dealing with inflation is a very terrible situation, because Islamic banking model does not want to charge interest rate. So they want to loan you money, you go to do your business, from the profit you make, then you share in it based on a very fair humanitarian value, norms respecting perspective. But when you are facing inflation from the money you've gotten from an Islamic banking model, how do you even make the profit to be shared with the bank? Then when you make loss, the bank still shares the loss with you. That's a good thing about the Islamic banking model. But it means that you will have a longer period to repay back your loan, which in the long run is even terrible or difficult for the bank to maintain continuous its investment in the Nigerian economy. So generally, addressing inflation is good for any banking model, whether Islamic or non-Islamic, whether business or non-business, whether it is personal or non-personal. Inflation is just a terrible ill. It makes everything unpredictable. The price, school fees, cost of production, everything. The price of everything just goes up, in an inflationary scenario.
Now, talking about, government helping to curtail, inflation, is it possible for government to actually fix prices or even control price change?
Okay, great. In that area, what government can do is to go after marketers, wholesalers, to ensure that they don't take advantage of the situation. For instance, somebody who bought fuel, a commercial transport operator who bought fuel before the prices went up, will still be charging as if he bought from black market. So these are some of the things that people do to people. These are man's inhumanity to man. It's unfair to do that. Even somebody who sells gold, jewelries, and this person stocked last month, last 2 years, will still be charging using new prices. Right. So but at the micro level, it's for consumers to always report people like that to Consumer Protection Unit, Consumer Protection Commission, for being taken advantage of. Then at the macro level, the federal government can maybe put in place a mechanism like a price invigilation process to ensure that producers or wholesalers don't take advantage of the system. And that is why it's important for everything to remain for every sector to be organized. If you go to the very big shopping malls, it's not possible that that happens because their own prices are being checked. They will give discounts and promos and things like that. But in areas whereby, in markets that are totally offline, that are not regulated, that you cannot supervise, it will be difficult to do that. But that is one thing that government can do to ensure that wholesalers or middlemen don't take advantage of the ultimate consumer.
Okay, this is, to a layman now. There are reports that amid the Russia-Ukraine war, fuel prices are expected to rise further. When you talk to people about the Russia-Ukraine war and how it affects us here, some people do not really understand how that affects us down here. So could you just talk to us about that?
Okay, Russia is one of the biggest economies of the world in terms of size and influence over the global economy. Nigeria's export is crude oil. Crude oil is oil that is not refined. It is just raw oil that we sell to the rest of the world. We export crude oil and import refined oil. Russia is one of those countries that we get those refined oil from. Russia is one of the countries that has a major supply of global gas and fuel energy. So when the war in Russia and Ukraine is going on, it means that our access to inflow of refined oil, which we need, which is the one that we get PMS from, that supply will be distorted. There are other places we can get from, no doubt, but Russia is one of the biggest in that space. That's one. Then secondly, most of our export is crude oil. But with Russia and Ukraine, we have agricultural exports. Very unique agricultural exports that will help us grow our non-oil revenue. So whether you are for Russia or Ukraine, for Nigeria, doesn't even matter. The war affects us both ways. Our best position is hoping that the war just ends right now. Because our trade in Ukraine is being affected. We have trade partnership with Ukraine. In fact, we have embassy in Ukraine. We have embassy in Russia. Meaning that we have trade relations, international diplomatic relationship with these two countries. And what makes Ukraine and Russia extremely important is that our non-oil export goes to these countries. And we have a lot of agricultural import from them as well. Things that are very critical in producing oat milk, cereals. I don't want to mention specific products, but those kind of agricultural products that are so unique. You'll be very amazed to know that even our soybeans, refined sesame seed goes to these countries. In a country where we are talking about growing the size of non-oil export, a war in Russia, the Russia-Ukraine crisis is bad for the Nigerian economy. It will certainly lead to shortage in agricultural inputs that we use for our own manufacturing process here in Nigeria, thereby leading to the increase in the food prices of all this agriculturally manufactured food. In fact, the Russian-Ukraine crisis will even affect the price of food that we use in feeding children 0 to 5. Because most of those type of food that children at that age, babies consume, comes from these countries. Not that it comes from them 100%, but our trade relations with them, those are the kind of areas that it affects. If our trade with US, for instance, is majorly on crude. So when US stopped buying our crude oil during the COVID-19 lockdown, we simply looked for India, and India became we just changed the market. But Russia, Ukraine, it's not easy to make that switch very fast because it has to do with non-oil exports. So this is the challenge where it's affecting us. So the effect for the people out there, for you and I out there, is that we'll feel it immediately in terms of delay in PMS arriving at filling stations. So we stay long at queues. Your job may even get affected. For those running transportation companies, their profit per day will reduce. For those going to places that are likely to arrive late, and then for those who are even earning, transportation costs will wipe off what they are earning. So these are the channels in which it affects. Then for those who have children 0 to 5, who still depend on all those kind of children food without mentioning names, they will notice that the price will increase as well. And for all those who Nexim Bank, Export Central Bank project has been supporting to grow their export value chain for non-oil commodities, they will notice a delay or a distortion in their business model to increase foreign earnings from agricultural output. This is the channel of impact. Yeah.
All right, well, in case you're just joining us, you're watching Daybreak on Trust TV, and we're discussing inflation with Dr. Tefa Abraham. We'll be back after this break.
Based on International Mechanized Trade Statistics Manual, the use of investors exporters window for exchange rate and updated data sales for MBS data sources were adopted as a methodology. Accordingly, during the fourth quarter of 2021, total trade stood at 11,707,000,000 with export trade value of 5,766,000,000 and import trade billion value of 5,940,000,000, which recorded a negative trade balance of 173.96 billion naira.
The report said that Nigeria's foreign trade grew 58% to 39.8 trillion naira in 2021 from 25.2 trillion naira the previous year. According to the report, Nigeria's export trade valued at 5.766 trillion naira is mainly dominated by crude oil.
In terms of export, ladies and gentlemen, the Nigerian export trade was mainly dominated by crude oil, which amounted to 426 billion naira, representing 74.04% of the total export during the fourth quarter of 2021. This was followed by natural gas, liquefied with 573.85 billion naira, representing 9.95%, floating of submersible drilling platforms with 265.33 billion naira.
Harry also gave figures on Nigeria's main imports.
Urea, whether or not in aqueous solution, with 208.05 billion naira, representing 3.61%. On the other hand, major products imported were motor spirit, value at 1,443.91 billion, representing 24.31%, followed by durum weight, value at 397.19 billion.
The report also brings to light Nigeria's major export partners.
In exports during the fourth quarter of 2021 were one, India with 874.86 billion naira, Spain with 789.23 billion naira, France with 485.35 billion naira, the Netherlands with 423.85 billion naira, and Indonesia with 288.10 billion naira.
Nigeria's top import trading partners during the period under review were China with 1.65 trillion naira, Belgium with 613.28 billion naira, India with 430.38 billion naira, the Netherlands with 416.52 billion, and the United States of America with 340.36 billion naira. Chamun Dabeng, Trust TV News.
This is Trust TV, documenting the Nigerian story.
All right, welcome back. Still talking inflation with Dr. Tefa Abraham, an economist. And I actually want to know, I have this question, how much do you think, as an economist, how much do you think inflation would actually increase this year? And for this one that we're actually facing, do you see an end to it?
Inflation is likely to stay double-digit the whole of the year because already we have a year that has a government spend of 17.126 trillion, higher than last year. And don't forget, there was a supplementary budget that the president has submitted to the National Assembly requesting for 2.5 trillion extra for fuel subsidy. And then it's a year where election campaigns will start. People start buying election forms and campaigns will start. All this will increase election spending in the Nigerian economy. There's also a period whereby, like I said earlier, there's inflation already, so spending is likely to continue. Our difficulty as a country to get revenue to fund our project means borrowing is also likely to continue. So generally speaking, it's expansionary fiscal spending that we're seeing. But the only thing is that central bank policy can continue to remain tight to help curtail the rise in money in circulation. But there's a limit to which central bank policy can also achieve. Because in a period where there's poverty, where there's unemployment, where there's high cost of living, central bank using tight monetary policy will be counterproductive. It will be counter-compensatory or complementary to the fiscal and income policy effort. So in summary, inflation is likely to remain double-digit for the whole of 2022. So what is important is for Nigerian business and entrepreneurs to begin to create substitute for anything that we import. The hand wash we import, if you can create substitute for it, for instance, it'd be very nice. But one thing also, we also hope that Dangote refinery will run before the end of this year so that it can reduce the import dependency we have for refined PMS, because these are some of the areas that we have supply shortage. And energy, in terms of crude oil, kerosene, gas, diesel, they are so connected. It's just like a basket of commodity. They are like brother, sister, cousin kind of space. So an increase in the price of one, the other one will follow, the other one will follow, and everything just goes alike. So until we have a major input from the Nigerian economy side to supply or cover the gap of import dependency that we have on PMS, that situation is not likely to go down anytime. Because it will be interesting to know that the people producing gas, they need fuel to sustain. The person supplying fuel needs electricity to power. The person the person channeling electricity also needs gas. So everything is just connected. And then ultimately, aviation fuel also needs diesel, and the person taking aviation fuel to the airport will go there by fuel. So the whole thing is just connected. Increasing the cost of one component will just lead to this ripple effect on everything. So, but don't forget, we're having this challenge because everything we get from this energy space is import dependent. Our refineries, the two in Port Harcourt, one in Warri, one in Kaduna, all are near zero production capacity. So until we address that domestic supply gap, we are likely to remain exposed to two sources of shocks: a shock in international price of crude oil and a shock in the international supply of the quantity of PMS. So double shock from two ways, price and quantities. It will be a terrible one. It's something that we cannot estimate when the scarcity or the fuel queues will end. One quick solution for the government to do right now, as painful as it is to have a strong stakeholder meeting with all the marketers and everybody in this petroleum, energy, gas sector, so that the government just have to listen to them and see what they can do to make these guys happy and restore equilibrium in the short to medium term, while awaiting Dangote's refinery to cover that gap in the long run, hopefully by the end of the year.
You know, you spoke about, the Dangote refinery coming up and running. But some will say it's really sad that we are waiting for, Dangote refinery to come up. The government has been talking about diversification of the economy, and our refineries are still not working. So in the short term, what do we have? What backup plan should we have, to cushion these kind of effects when they come up?
In the short term, what can we do now, right now? What we have is two refineries in Port Harcourt, one in Warri, one in Kaduna. And you know why? Do you know how these refineries work? All of them have their own production capacity. The quantity of crude oil, of refined oil they can produce per day. But to produce, they need stock feeds. They call it stock feed. They need that stock feed is supply of crude oil. Kaduna Refinery, Port Harcourt, Warri, they need supply of crude oil. Crude oil is the input that they convert to PMS. Crude oil is the direct raw material that goes to these refineries. Then they convert it to PMS, convert to kerosene, convert to other derivatives based on the volume of heat that they introduce to the production system. These refineries are not even getting the crude oil they need to refine. So now that we have these refineries there, the hope on Dangote's refinery is that, being a private sector business model, it will be able to have its own unique supply of crude oil, that it may even in the long run use these other ones we have already as production outlets. But again, like your question rightly said, this is something that we are looking at the end of the year towards early next year to attain, to achieve. Right now, we have illegal refineries, the one Nigeria have branded illegal refineries. And we also have modular refineries. Modular refineries are refineries that states can even invest in. Edo State, Kaduna State, Benue State, Niger, anybody can invest in modular refinery. So that when Port Harcourt refinery is dealing with producing 100,000 barrels of crude oil per day, modular refineries will be looking at 3,000, 5,000. Just smaller. Modular means small, just smaller amounts. So states can also invest in modular refineries. I think Edo State is currently doing that, so that they can at least help address the little supply gaps of PMS in their states. Then I think the military approach we are using to end illegal refineries should be reconsidered, because illegal refineries, they are producing something. So rather than declaring them illegal, why not find a way to get them to operate within an existing legislative framework or legality and see how much you can get? Because you'll be amazed to know that even the people who bring PMS to us as imported, some even get these supplies from these ones we brand illegal refineries. So in trying to stamp out the underground economy, you are affecting the formal economy. So these are things we can do right now. Invest in modular refineries, find an alternative framework to regulate what happens in the illegal refinery space. What is illegal, no doubt. It hurts the Nigerian economy. But we are saying that instead of just stamping them out, getting their product and wasting it, find a way to arrest them, halt their production, and force their production to feed into the formal market to address this shortage we have in supply in PMS. So these are things we can do in the immediate, like today, this week kind of action. Then one other big news we should be hearing this week or next week is stakeholder meeting between National Assembly, Petroleum, Pengasit, all of them, all those marketers, and the executive arm of government towards what can be done to also avoid a shutdown in the aviation sector and also reduce the effect on the cost of businesses that are running and depend solely on fuel to power their systems. Because already this period of fuel shortage is also being accompanied by distortions in the supply of electricity. So you can see it's like a double punch hit on businesses in terms of energy side. And very sooner than later, don't forget, even primary schools, secondary schools run on energy, diesel, fuel system. As we are resuming very soon, when children go on holidays, you might be hearing increase in school fees. And don't forget, this is not being accompanied by increase in salaries. Rather, inflation is even eroding the real effect. It's also eroding the real value of wages. So it's a really terrible situation right now. It just needs urgent actions to be implemented at the moment.
We really do hope we come out of this chaos, because Nigerians are really going through a lot.
It's not easy, I must tell you. It's not easy.
Well, thank you so much for coming on the program, Dr. Tefa Abraham. He's an economist, and we hope to have you next time.
Thank you very much. My pleasure.
All right, with that, we've come to the end of Daybreak. Thank you so much for tuning in. I'm Dasha and Husseina Usman. Have a wonderful day ahead.
And I'm Zainab Bala. Have a good day.